Well, people can come in here in just a minute. I'm going to go ahead and I'm going to just start the administrative part of it. So, Eric, let me know when you're ready. Okay. Just some of the administrative comments that we all need to share. The emergency exits obviously are to your left and to the front, but there's one over here to your right, and if you go down the stairs, there's another one that goes out the back. If you need to use the ladies' or the men's room, if you haven't been here before, it's down one flight and around. You can either take these stairs or you can take the elevator. The objective of the forum is really pretty straightforward, and it's educating all of us, because we're all citizens and taxpayers in this community, on how the process occurs. The major taxing entities, which we have represented here, there are more. You know, if you're out in the community, there are water districts. You know, there's fire districts. You know, there are a large number of smaller taxing entities, but we brought the big players here that pretty much have the largest percentage of the taxes that we all experience. We wanted them to talk about their processes. You know, this isn't about what your taxes look like right now. What we're here tonight is talk about how did we get here, and there's a twofold reason for doing that. One of them is so that there's some transparency. We kind of know what to expect out of these taxing entities. When are they going to do it? But also, how can you and I engage in this process, either as a day-to-day citizen or as a business owner? You know, where can we get engaged in the process when we either have concerns or we're concerned about our own tax bill? How do we get engaged in this process for change? And there's a couple of things I'm going to make a point here in a minute before I turn it over to the panel members that I think you'll see that our community's got some real challenges. And they didn't create it. They're just challenges. And compare a little bit just for a second with what's happening in Missouri, because there's some changes going on there that we can work in our own legislature. You know, we don't have legislators here tonight because they don't directly get involved in it. But there are some things that we can do about our taxes that are the thinking out of the box piece. How do we broaden our tax base? How do we reduce our rooftop costs? And so as they go through their presentations, one of the things I asked them to do was when they kind of get through the processes, if they had any challenges, I asked them to share those. Some may not, but because sometimes we don't see what they're struggling with when it comes to our taxes. And so this is an opportunity for them to talk to you straight out what their challenges are as they try to do their job for us. It's educational. At the end of it, time permitting, we are going to provide time for you all to ask questions. But this is an educational forum. We're not going to discuss, well, the taxes went to this point, they did, now how did we get there? You know, how can I engage next year as we get into this process? Who should I be looking to engage with? You know, those are the key questions we really like to hear from you all. You know, how do I get engaged in this process? So it's not what our taxes look like right now. It's how did the process get us here, and then what can I do as a citizen to engage in the future? And oh, by the way, if you have any suggestions for future forums or future opportunities to get together like this again and explore what we can do in our community, we in the chamber, and particularly the Government Affairs Committee, we'd love to have that input. They'll have 15, 20 minutes to present. This all depends on how quickly we go here and how in-depth we get. Time remaining, we'll take your questions. The order of presentation will be the members that we have here. Of course, I'm Mike Powell. Live here in the community. I'm just a community member like you. We have Mr. Bob Weber, who is the Leavenworth County Appraiser. Mr. Jeff Culbertson, who is the Leavenworth County Commissioner. I already mentioned Mike Stevens in the back. You can ambush either one. Tim Vandall, who is the Lansing City Administrator. And then we have our two school districts represented here, USD 453, Dr. Kellen Adams, and USD 469, Mr. Marty Kobza. So, and I've been able to work with these guys. They're great to work with, and I appreciate my personal appreciation to all of you for participating tonight. So why did the Chamber engage in these forums? You'll see a couple of reasons here. You'll talk to somebody on the street and they'll go, "God, those dadgum taxes, they're just eating me up." Okay, the question then is, which taxes? If you're a businessman, it might be your sales tax or excise tax. If you're a working person here, it might be your income tax. If you just registered your car, it might be your personal property tax. So what taxes are we talking about? So there's a broad range of taxes that when you accumulate them all together, yeah, they are eating us alive. But individually, you have to understand how they work together individually. So we're going to focus tonight on the property tax piece of this. And just for the record, when we say, well, okay, those taxes are eating me up, and then we blame the state only gets between 1% and 2% of property taxes. So property taxes are not where the state, at the state level, gets their taxes. Those are the kind of things, as we understand it, we know who to engage with and how to engage. So this is the reason why property taxes are important to us here in Leavenworth County. This county has the highest property tax burden in the state. I got 77.28% here, but Bob's got a little fresher round of slides than I do here. They're still above 70%. 3/4 of our taxes are collected off of, the term that's used is rooftops or storefronts, just meaning commercial, period. Rooftops mean you're in my home. 77% of the taxes, the property taxes that are collected and consumed in this county are on your roofs. And that's just an amazing number. And if you look at the comparison between a like-type county, like-type population, like-type commercial enterprises, those kind of things, look at the balance of the tax base here. 55%, we're 25% higher than the closest county in property tax, or the property tax, because of how our properties are distributed. And we have, and when you see the sales tax presentation, I think in October, you're going to hear Leavenworth talk about, well, what do? I have the post, just to the north of me that I can't collect any taxes off of. I have the colleges and universities and nonprofits that I can't collect taxes off of. So we're uniquely challenged here within this community, and specifically Leavenworth and Lansing, when it comes to finding equitable tax bases to allow them to do the things they still need to do. We still need fire, we still need water, we still need sewer, all those kind of things, whether we like it or not. And so it really comes down to is if you look there to the right, commercial real estate is above 20% in this rural county. We're at 11%. I mean, right there, it jumps right out at you. It's storefronts, it's not rooftops. So we're further challenged because Kansas right now is way behind both Missouri and Oklahoma when it comes to collecting or being a welcoming place to build storefronts. So businesses we're way down on the pecking order in all 50 states based upon us welcoming commercial business. So this area now is not only challenged because of, and I'll show you a slide here in a minute, geography and other things, it's challenged because just the state where we stand right now, we are not bringing businesses in, we're losing business. And Chamber of Commerce is really concerned about that. We want to see our commerce build. So what else is really unique about this place? The city of Leavenworth in particular is critically an example. We have a military installation to our north. We have a river, no taxes are collected. We have a river on the east and another state on the east. To the west, we have the Stranger Creek watershed area that right now is not commercially viable to build anything in. And then we have Lansing to the south. We like you guys, Tim, by the way. It's not a bad thing. It's just we can't grow that way. So here we are, we're in a fishbowl. So if we're trying to build storefronts, the idea of a commercial complex to offset our rooftops in Leavenworth, where do we go? What do we do with the existing rooftops? And that's really why we as a group within our chamber committee really are committed to doing this. We've got to find a better way. We've got to understand how these processes work. But then we've got to have a dialogue. How do we change our community? How do we help our revenue developers? How do we change this tax base that we've got? That's really the million-dollar question, as we mentioned here. But what we don't understand, we also can't change and we can't improve. And I'll give you an example of that I said I would a minute ago, Missouri versus Kansas. They just enacted a law because this is also a heavily retired community. So Missouri just passed a law, and the law allows certain categories of individuals over certain ages, certain incomes, et cetera, to freeze their taxes. And every year they can go back as long as they meet that criteria, and they can freeze the value of their property being assessed every year. So that allows people that are like over 62, people under certain incomes, that would be challenged. Every time the tax goes up, they got to find another way. My dad's 95. I just filed for him. How is my dad going to go back to work to pay off the additional income taxes on his home, even though he's paid for it? That's the challenge. Those are the things that we can talk about. We can get into it, and I see that, Jen, as a future, is once we get through all these tax presentations, is get into a public forum. Let's talk about taxes now. We understand it, let's talk about taxes. And that's where we can talk about engaging with our legislature to make these changes occur, or to look at other options, et cetera. So that's, hopefully that gives you a little bit of the fire that we've got to try to help you understand, help us understand, because we've got to get after these problems. And they are unique, and they are hard. I mean, this geographic political boundaries really, really makes it hard for Leavenworth to change the way that we pay taxes. And some of this information that I got, I leave it in here is the research. And this is to let you know that all of this will be posted on the Chamber's website. We're doing a video. Mr. Culbertson is going to do most of his presentation verbally, so that will be provided also on the website. So even though we'll have the hard materials that we're presenting here on the website, we'll also have the video. If you didn't get something from Jeff's or one of the other presentations, you didn't get exactly what they were saying. So it'll be on there. It'll be there for you to reference. You don't have to be a chamber member. You can pull it down and look at it anytime you want to, right? So with that, Mr. Weber, I give the floor to you.
I'd like to start off just by playing the video.
Okay.
So there's a lot of misunderstanding about the role of appraisers and how they affect the property tax that homeowners pay. When someone hears the term appraiser, they seem to think of a scary figure reaching for their wallet. Not so. Appraisers don't set tax rates. Appraisers don't chase tax dollars. An appraiser is interested in fairly determining property values, and they take great pride in it. Property tax is determined by a simple formula. Appraisers only affect one of these variables, the value, and they do so with incredible accuracy. Appraisers aren't tax collectors or even tax setters. They're just fellow taxpayers, and their primary goal is to make everything fair and equitable. Imagine that you are in a restaurant with two friends. One orders a hot dog, one a plate of caviar, and you order a steak. The waiter comes to the table with a total bill of $100, but he doesn't know how much each of you should pay. If everyone paid the same amount, the guy who ordered caviar might be happy. But what about the guy who ordered a hot dog? Enter appraisers. The food is your property. Just like these meals, some people's property is worth more than others. And it's the appraiser's job to determine how much each property is worth. That's it. So, in the same way the value of these menu items would need to be determined, an appraiser places values on properties to ensure fairness and equity. After the appraiser determines the value of each property, local governing bodies will set their budgets for the coming year. They set the tax rate in order to produce the dollars needed for their budgets. The value of a property does not affect the amount of property tax needed. The sum total of all these budgets is a set number that has to be divided up among all the property owners. So even if everyone's value was cut in half by the appraisers, the tax rate would be raised in order to generate the same amount of tax revenue. The appraisers don't determine the taxes you pay. They just determine the values of properties to keep everything as fair and equitable as possible. When you notice a change in your property's appraised value, the change is the result of a never-ending quest for fairness and accuracy. Appraisers are graded on their performance, so there is a detailed system to get accurate valuations. First, the appraiser looks at similar properties that have sold, their sale prices, and the terms and conditions of each sale. That's the reason your home won't just be compared to the place next door. Studying things like square footage, age, and location helps appraisers determine how comparable another property is to yours. Even seemingly small details, like an extra bathroom or finished basement, can result in significant differences in value in two otherwise identical homes. Appraisers maintain a thorough database of real estate information to make this process as precise as possible. Changes in value are typically the result of local real estate market sales or major changes to a property. Remodel a kitchen or finish your basement, and your property's value could increase. When you see your home's appraised value, you can rest assured that the number has not been drawn out of a hat, nor generated with anything but equity and accuracy in mind. Long story short, appraisers are here to help, not trying to hinder. Their focus is accurate values, not tax collection. The only things an appraiser chases are fairness and equity, and they take great pride in it.
Okay, I'd like to just start out by going over some basic history, some basics of property tax, and the history a little bit in Kansas, to try to explain why we do things the way we do now, how we got where we are now. The first slide is the nature of property tax. Property tax spreads the cost of local services across the value of all taxable property. Like I said in that video, the property tax provides local control over a level of taxation. Individual governing bodies set their budgets, and the property tax is levied to fund those budgets. It's not determined at the state level, it's determined at the local level. Property tax is more stable than sales or income tax. Sales and income tax can provide more or less than is needed to fund the budget, where property tax will provide just the right amount to fund that budget. Property tax provides a balance to the state's overall tax system. So you have sales, income, and property tax. One of the downfalls of property tax is it is complex to administer. Next slide. Article 11 of the Kansas Constitution states that except as otherwise hereinafter specifically provided, the legislature shall provide a uniform and equal basis of valuation and rate of taxation of all properties subject to taxation. This wording is important because any reforms, any changes, there's been a lot of talks of caps putting on valuation increases. This is the wording that's in the Constitution, so any changes have to have a constitutional amendment to go along with it. Otherwise, it will not be constitutional. The Article 11, I failed to put this slide in, but the Constitution also sets the rates, assessment rates. So the county appraiser appraises your property and also classifies the property. There's different rates. Residential property is assessed at 11.5% of its market value. So we appraise it at market value, it's assessed at 11.5% of that. Commercial property and ag buildings, there's 25%. Vacant lots are 12%. Agricultural land is 30%. Agricultural, everything's valued at market value with the exception of agricultural land is valued at a use value. That's established by the state of Kansas. It's much lower than market value. Public utilities are assessed at 33% and all other properties assessed at 30%. Okay, thank you. Kansas history. In 1959, the state of Kansas underwent a statewide reappraisal. Several years after the reappraisal, one county updated their property values while the neighboring counties did not. That reevaluation was challenged in court. Arguments were made since school districts cross county boundaries. Taxpayers were paying more than their share of taxes in the county that was revalued as their values had been updated and the values in the same school district across county lines had not been updated. So you had two properties appraised at $50,000. One was raised to $70,000 and the other one in the same school district on the other side of the county line was still valued at $50,000, even though it was worth $70,000. The case wound up in the Kansas Supreme Court, and due to the Article 11, which I just wording in Article 11, the court ruled that an individual county could not update their values. Subsequently, any reevaluation would have to be done on a statewide basis. and all property values were frozen at their 1959 value. Next slide, please. Statewide reappraisals are very politically unpopular, and no state legislature wants to vote for one, and property values were frozen for 30 years. There were, consequently, a property built in 1980 was valued as the same as a house built in 1959, and property values were inequitable across the state. In the mid-1980s, due to some court cases that were challenging the statewide appraisal system because everything was out of whack, the legislature ordered a statewide reappraisal to take effect in 1989. And in the future, in order to keep property values equitable, laws were passed requiring values to be updated every year. That reappraisal happened in 1989. There were some problems with the initial appraisal. There had to be a lot of cleanup after that. In 1992, the state legislature passed a statewide general school mill levy in response to a lawsuit filed by several school districts over inadequate and ununiform funding of school districts. So now, in addition to having school districts crossing county lines, you had one tax unit crossing the whole state of Kansas. So that means values had to be equitable all across the state, from county to county. That same year, next slide, please. That same year, as a response to the statewide school general levy, the Kansas Attorney General sued the Secretary of Revenue and the Property Valuation Director, alleging appraisals were not uniform statewide. The main questions that needed to be answered in the lawsuit were, are appraisals uniform and equitable, and are they reaching market value? As a result of these two questions, the state developed appraisal maintenance specifications and procedures to be followed and studies to be developed in order to achieve appraisal goals, in order to achieve a uniform, equitable market value each year. Procedural compliance audits started to be performed to ensure counties are following the procedures and implementing the results of the studies in their valuations. And assessment sales ratio studies were developed to ensure appraisal level and uniformity goals will be achieved.
Hey, Bob, would you move your hand up on the microphone and not cover the transmitter? Now, there we go.
Sorry. Okay.
We'll make a rock star out of you yet.
All right. You don't want to hear me sing, I guarantee you that. Thank you. Assessment sales ratio studies compare appraised values to sale prices. Properties are appraised as of January 1st each and every year. And the sales prices from January 1st through December 31st of that year are compared back to that appraised value that we appraised as of January 31st. Assessment rate is calculated by taking the appraised value divided by the sale price. A ratio below 100%, then the property is appraised lower than they are selling for. A ratio above 100%, then the property is appraised higher than the sales prices. The median ratio, Kansas law requires a median ratio between 90 and 110%. The coefficient dispersion is also calculated. This statistic measures how dispersed. Now, so you could have a median ratio of, say, 95%, but you could be all over the map. Your values could be all over the map. And so they calculate a coefficient of dispersion. The state standards is under 20%. That's because all counties have the same standard. In small counties, it's harder to achieve. Our standards would be more like 15%. We usually run between 7 and 9% is where our coefficients dispersions usually run. Our median ratios are usually between 90 and 95% each year. As I mentioned before, there's an oversight agency at the state level. It's the Kansas Department of Revenue Property Valuation Division. PVD for short. Some of their duties are to conduct the Kansas Assessment Sales Ratio Study and the procedural compliance audits. County appraisers must follow directives, memorandums, and guides published by the Director of Property Valuation Division. PVD also calculates the agricultural use values. As I mentioned before, agricultural values are not at market value. Their values are calculated by the state, and we apply them. We just classify agricultural land as agricultural, whether it's grass or crop, that sort of thing, and then we apply the values the state gives us. They also value state-assessed utilities. So utilities do pay taxes locally. They're valued by the state of Kansas, and they certify those values to the county clerk. The Board of County Commissioners, so as a county appraiser, you kind of have two people you're responsible to, is the State Property Valuation Division and the Board of County Commissioners. The Board of County Commissioners appoint the county appraiser for 4-year terms. County appraiser, they can't just appraise anybody. They must be on a list on the Director of Property Valuation Division's eligibility list. They must currently be a registered mass appraiser issued by the Kansas Department of Revenue, or a general certified real estate appraiser issued by the Kansas Real Estate Appraisal Board. And they have to have 3 years mass appraisal experience. Excuse me. Mass appraisal is different than when an appraiser comes out and appraises your house. They come out, they appraise your house. Within a few days to a week, you'll have a value appraisal, and it'll have a value, or the bank will anyway. We appraise all properties every year as of January 1st. So your procedures for doing that have to be different. There's no way you could get that done using the same procedures we do. County appraiser's duties, just a few of the county appraiser's duties is to discover and list all real property. Annual appraise all real property as of January 1st. Annually appraise all taxable personal property as of January 1st. And actually view and inspect all real property in his or her jurisdiction every 6 years. And we usually accomplish that. We canvass a certain part of the county. It comes out to be about 17% of the parcels. We have a little over 32,000 parcels, so it ends up being around 5,400 parcels a year, somewhere in that neighborhood. How do we actually value your property? Now, there's 3 approaches to value. The cost approach, the market approach, and the income approach. The cost approach is the cost, not the historical cost of your house, but the cost to replace it today, to rebuild that property today. And then you depreciate that cost because it's not new, and then you add in the land value. That's the basic of the cost approach. The market approach, or comparable sales approach, takes homes as close to similar as your home as we can find. It says properties of known value, and that means properties that have sold. That's key because we can't just take your neighbor's house if it hasn't sold recently. In order to provide up-to-date values, we use 2 years of sales to try to get enough comparables in our system to find comparables for all properties, but not to go so old as to be out of date, because our valuation date is as of January 1st each year. And so we need sales as close to that as we can. Now we won't find identical properties obviously. So we will make adjustments for differences. So if we're comparing you to a house that has a finished basement, we're going to deduct from that sale price what that finished basement is worth. Or if yours has a garage and it doesn't have a garage, we're going to add to that sale price that we're comparing you to for the value of that garage. The next one is the income approach. Income producing properties, primarily commercial properties, generally are bought and sold based on the income they provide. So if you know the net income and you have an idea of what buyers, investors, and those types of properties require for a rate of return, you can get the value. And that's just the income divided by the required rate of return, which we call a cap rate, equals the value. Now, we primarily use the cost and market approach on residential property, single-family residential specifically. We use the cost and income approach on commercial property. You can use a market approach on commercial property. It's just a little bit more difficult to administer in a mass appraisal. We have 11 to 17 good sales of commercial properties in the county a year. And a sale of a mini storage doesn't tell you any idea what a restaurant's worth, or vice versa. So lots of different types of properties in commercial. Now, you can appeal your property value. There's two methods to appeal. Two times you can start an appeal process. Now, once you start this appeal process, the hearing levels look the same. But first, you can appeal your property value or classification to the county appraiser within 30 days of the date of change of value notice. Now, we mail those valuation notices on March 1st of each year. That's when we're required to mail them, on or before. You can do that simply contacting our county. You can call us, walk in person. We have email. People can send us emails. You can go to our website. We have you can send us an email. We're pretty informal about how we let people start that process. You just need to notify us in 30 days. Or you can file a payment under protest when paying your first half or second half of your property. That means you have to file a form with the county treasurer when you pay your taxes. Now, if your taxes are in escrow, you have up to January 31st of the following year. So for the 2024 taxes, those taxes will become delinquent after December 20th, so you got to pay them by December 20th. But you have, if your taxes are in escrow, you have until January 31st of that following year to file a payment under protest. You can't appeal both times. The only time a property can be appealed twice is if it changes ownership. So if we sent a change of value notice in March, it sells in May or June, and it's already been protested, the new owner wants to protest it, the new owner can protest it. The hearing levels. Once you start a hearing, it's important to see it through as far, because once you stop, that stops your appeals process for that year. So if you start an informal appeal, and which is just a meeting with myself or my staff, and we will present to you why we have the property valued. We'll go over the information we have on your property. We will show you what we compared it to, how we compared it, what we came up with for the value. And then you'll be able to tell us why you don't think we're right or what we're missing on your property. You can ask us to come out and look at your property if that's what you want. We will do that. It's an informal meeting, and you can come into the office, or we can do that meeting over the phone too. It's whatever you prefer. After that meeting, we will make a decision, and we'll send you the results of that. If you're unhappy with that, you have 30 days. Remember, everything's 30 days. You can appeal to the Small Claims Division of the Board of Tax Appeals for residential. Now, per commercial, you can have a choice, generally, unless it's above a certain dollar amount. You can either go straight to the small claims, or you can go straight to the Board of Tax Appeals. Residential property has to go through the Small Claims Division. Small Claims Division is another informal hearing. It's just an individual from the state will make the decision, appointed by the state. We will present why we have our value and why we have it valued the way, and then you get a chance to present why you don't think that's the correct value, and you can get to give your opinion what the correct value is. Hearing officer from the state will make that decision. Since COVID, those hearings have been held exclusively over the phone. They've never went back to in-person hearings on those. From there, you can appeal that decision to the full Board of Tax Appeals. Board of Tax Appeals is a 3-member panel. One's a CPA, one's an attorney, and one's an appraiser. And those hearings are just about always in Topeka. And that's the first really hearing of record. There's no records kept at the other levels of hearings, so that's the first hearing of record. And they will make a decision. The same format, we present our case, you present your case. You do not have to have an attorney. You can have an attorney. You don't have to have an attorney for the Board of Tax Appeals. And most residential cases, unless we've got questions of law or something, we don't have an attorney. Commercial cases are a little more complex, and so we'll have an attorney there on those. From there, you don't like that answer, you can go to the district court. Starts a whole new hearing as if the other ones didn't, it's called de novo, as if the other ones didn't happen. So you just start from scratch, and at district court, a judge is appointed to the case, and you can have your attorney or yourself or whatever, and you can present. The county still again has to present their case, and then you get a chance. So the county's appraisal is not presumed to be right. We have to go forth with evidence supporting our value at any levels of these hearings.
Yeah, Bob, as we go through the statistics, we'll have to go through those quickly.
Oh, I'm sorry. Okay. You might ask, why is my appraisal going up every year? Well, if you look, I got sale prices. These are average sale prices for Leavenworth County. From 2014, we were a little over $170,000. In 2023, we're about $130,000 in just that time frame. It took us 20 years to go from an average sale price of $100,000 to $200,000. It took us 5 years to go from $200,000 to $300,000. So that's how quickly values have risen here lately. We're using those to value your property, and those are the sales being used to compare for that assessment sales ratio study I was talking about. Again, these are the number of sales we've had in the last few years. You can see they've dropped off the last couple of years' numbers, but the average sale prices have not gone down. They've continued to increase, although a little bit slower last year's. If we can just skip to the chart on the next slide, we can just skip to that one. And this is similar to the slide you've seen earlier. I didn't know Mike was going to have this. This is just for last year's, for 2023, and it's 78.25%. So I won't rehash this information.
Other than it's gone up.
Was that? Yes, it's still the most the highest of residential, excuse me, of any county in the state. Highest percentage of valuation, the total valuation. The next one is a distribution of Leavenworth County. This is all property taxes collected in Leavenworth County. So you can see that the state has 1.25%, the county has 29.61%, cities make up 14.91%, townships is 2%. If you add the school USD general and USD other, that's the general is that statewide mill levy we were talking about, and the others are what the other there are other levies that they have. That adds up to about 45% of property taxes where it goes. And then the rest of them you can see down there, they're very small percentages. The next slide is just that represented graphically as a pie, and the county, and then the cities, and then you see the two big ones on the left-hand side. That's the schools, general and school other.
Yeah, I think this kind of gives you a good shot of what I was talking about earlier. There are a lot of taxing entities out there that we don't necessarily deal directly. Thank you, Bob.
Okay.
And you'll be able to ask questions at the end of the presentation if you have some. And I turn it over to Mr. Jeff Culbertson, the Leavenworth County Commissioner.
You want to get us back on track?
Yeah, your 15 minutes is appreciated.
I can do that. Okay. So, good evening, folks, and thanks for having me tonight. I'm Jeff Culbertson, the District 1 County Commissioner. I'm elected by the north end of the county, which includes Kickapoo Township, Easton Township, Easton City, Fort Leavenworth, and the north half of Leavenworth City. But really, we all work for the entire county. You just heard our county appraiser explain how the appraisal system works. I use the term our county appraiser loosely because he's not really the county's appraiser. He actually works for the property valuation department in Topeka. The state of Kansas makes every county have an appraiser. The state of Kansas makes all 105 counties use the same appraisal system, whether that's the best taxing system for any particular county or not. If it were up to me, I would never use a property tax system for Leavenworth County. No offense, Bob, but I wouldn't even have a county appraiser. Using this property tax system is exactly why your property taxes are so ridiculously high. Only 33,000 people pay property taxes in Leavenworth County. If I were allowed to use the best system for our county, it would be income tax and/or sales tax. Hundreds of thousands of people pay income tax and sales tax in our county instead of only 33,000. So those numbers by themselves would result in drastically lowering taxes per household. Another big problem with using property tax for our county is Leavenworth County is almost 50% property tax exempt. So not only do a small number of people pay all the bills, half our county pays absolutely nothing in the county budget. This means the other half that are paying pay twice as much to make up for the exempt. The statewide property tax system in place today is the wrong system for Leavenworth County. Until this is fixed, your property taxes will continue to spiral out of control. A 1% income tax would completely eliminate property taxes in Leavenworth County. Ask yourself, would you trade paying 1% more state income tax instead of what you pay in property tax? The average dollar amount for households would mean paying about $100 more in income tax to eliminate $3,000 a year in property tax. This is one of the proposals I testified in Topeka on. I worked with Senator Haley from Wyandotte County to try and get House Bill 79 passed that would do this, but it never even made it to the floor. The big problem is our state legislators have to pass statewide mandates, meaning most every law they pass applies universally to all 105 counties. So even if a law is not good for a few counties, the majority rules. This property tax system works fine for about 95 counties. So even though it does not work for about 10 counties, we use it anyway. Because when they vote on a law, even if 10 counties voted against it, the 95 counties get the vote. This is why Leavenworth County is forced to use the wrong system. We need legislation that is county specific. Not just on tax issues either. For example, to help illustrate this, speed limits on gravel roads, for example. This just came up the other day. The statewide legislation for speed limits on unposted gravel roads for every county is 55 miles an hour. Because most counties out west have mostly gravel roads, and almost all of those gravel roads are straight and flat, so 55 miles an hour works fine. But in eastern part of the state, like our county, for example, it would be insane to drive 55 miles an hour on some of our gravel roads. But since the state always passes statewide legislation, it applies to us too. Like a lot of state regulations, one size does not fit all, but we do it anyway. This is why this county commission has presented several solutions to high property tax in Topeka. We have not been successful as of yet on any of those, but we continue to try. One such request is the income tax instead of property tax, House Bill 79 that I mentioned earlier. Another request is a 4% cap on valuation increases. Many folks are crippled with drastically increased taxes each year because they're seeing their property valuations increase 20% in 1 year. We ask that they put a limit of 4% on the valuation increases per year. This way a person could at least adjust slowly to big tax jumps. If their value went up 20% in 1 year, it would be spread out over 5 years. If we could do this at the county government level, we would already have done it. but it can only be done by state legislation. Another measure that would help reduce your property taxes was the LAVTR. If you don't know what that is, that's the reason that it was taken away. Many years ago, the state saw exactly what I'm talking about, with property tax being the wrong system for some counties. They set up the LAVTR, which stands for Local Ad Valorem Tax Relief, to spread some of the burden from property tax onto sales tax. They passed a law saying the state will collect 1.5% sales tax and give it to the counties and the cities to offset property tax. But in about 2006, when the state got into financial trouble, they stopped giving the 1.5% sales tax to the counties and instead just kept the money for themselves. This county commission testified over and over in Topeka over the last 5 years, but instead of following the law on the books and paying the counties, they abolished the LAVTR law this year. The ironic part is they are still collecting the 1.5% sales tax from you that you're still paying today and just keeping it. Another plan we have proposed is building a new bridge connecting us to Kansas City much better. If you increase your business, commercial, and industrial properties, your property taxes will be drastically reduced. But to do this, you have to be desirable for those businesses to come here. Being an hour away from Kansas City is not desirable. I use Liberty, Missouri as an example of this. They were struggling with high property taxes and actually losing population until they were connected better to North Kansas City with major highways. Today, they can't even keep up with the new construction and were able to cut their mill levies in half, all because of connectivity to the major metropolitan area. Most people don't even realize that Lansing, Kansas and Parkville, Missouri are only 1 mile apart. But because of the river, you have to drive 30 minutes to connect them. If we built a new bridge in the best location, you could get from the Quick Trip in Lansing to KCI Airport in 6 minutes. And I've got a map up here if you guys want to look at that later that shows exactly what I'm talking about. Our industrial parks would fill up overnight with this kind of connectivity. This would result in drastically lowering your property taxes. But I can't get any of our state legislators to help facilitate this idea. Another measure that would reduce your property taxes is a pilot check from the federal government. This touches on the first thing I talked about, how almost 50% of our county is tax exempt. The biggest non-contributor of this is the federal government. It is true that our county is the third largest income tax earner in the state of Kansas. The fort contributes mostly to that, but zero income tax goes into the county budget. So the fort actually creates an economic obsolescence for our county budget. An example of this is our EMS service. It costs me and you $2 million each year to keep our ambulance service operating. The fort uses our ambulance service, but they pay nothing to maintain it. The federal government sees this in a lot of instances across the country. That's why they pay a pilot check, payment in lieu of taxes, to communities that have a large exempt federal presence in those communities. Every community that has a Department of Interior facility, DOIs, gets a pilot check every year for millions of dollars they're losing from property tax exemptions. But they do not pay pilot checks to communities that have Department of Defense facilities for some reason. I've been to D.C. to work on this issue because I can't get our local legislators to ask them why. Everyone in D.C. tells me this needs to be fixed, but it begins with our local legislators. We should be receiving about $35 million a year in the county budget for exempt federal property. Since we don't, you and I have to make up that difference. In closing, I just wanted to make sure you understand there's only so much your county government can do. Relieving high property taxes is not one of them. The county budget is not why your property taxes are high. Please stop trying the same practices over and over every year and expect a different result. Until most people understand all this, the problem will not only continue, it will get worse. Every problem is fixable, but you have to actually understand what the problem is or it won't get fixed. One thing I wanted to add was, it was said earlier that Leavenworth County has one of the highest mill levies in the state, which is true. The confusing part is of that, the fraction that goes to the county is actually the 7th lowest in the state of Kansas. So when you're talking about the whole mill levy, yeah, and if you live in Leavenworth County, your mill levy is super high, one of the highest in the states. But you blame the county because you get your tax statement from the county, you call the county to set up the hearings. Everybody thinks that all that tax money you're paying goes all to the county, when actually we only get about 25% of that tax. So the part that the county gets is the 7th lowest county mill levy in the state of Kansas. That's all I have.
Jeff, before you pass it on, if you could just address one thing, because you do have a budget, you do have mill levies. You and I talked about this before. Could you kind of explain how it's somewhat different than what some of the other taxing entities do, as far as who builds their budget and then how the budget process flows? Such as the sheriff, such as the county attorney.
So like when I was talking about, you get a tax bill in the mail, it comes from Leavenworth County. What I wish they would do, the state, is let each taxing entity send out their own tax bills. Because like I said, the county only gets about 25% of your taxes. The sheriff is an elected official, he has his own budget. The treasurer is an elected official, they have their own budget. Everybody who's elected has their own budget. Even though they're under the realm of the county really doesn't control those mill levy items. So it makes you think that it's going to all one pot, but it's not. It's divided up among, it depends on where you live, but up to a dozen different taxing entities that the county commission has no control over. Is that what you meant?
Yeah, but you do have some review process.
As far as the elected officials, but the way the law is written is confusing. It says that the county will approve all the electeds' budgets, but we don't really approve it. We basically just work with them. There's another law a lot of people don't know about that basically says we can't tell elected officials they can't have what they're asking for. We can ask them, but we do not control their budget.
Good, thanks, Jeff. Tim.
All right. Thanks, everyone, for being here. One thing, I think the first slide that I wanted to go over was kind of the procedural aspect of how we do our budgets in Lansing. And if you guys can read that, the very top line, do you guys see when we start working on this? April 5th, 2024 was when we started working on the 2025 budget for the city of Lansing.
Thanks, Jeff.
So one thing that I would remind you guys, that's the 2025 budget. So in April 5th, 2024, we are trying to think about what the expenses are going to be in December of 2025. So we're trying to project expenses and revenues 18 to 20 months out. So that's a little bit challenging sometimes. So you guys can see we start this in April. In May, we go over large-scale projects and requests from our department heads. I work with our finance director to go through all of those things. On June 14th of this year, we received our initial valuation estimate from the county, and that is what we would base our preliminary mill levies on. We would host council work sessions. I think we had 2 this year. And then we proposed our final budget July 10th. And we just approved our city council's operating budget on September 5th. So there's been a lot of new procedures the last few years with the advent of the state's revenue neutral rate. For us, basically what that meant in Lansing is we had to have an extra public hearing this year. So we had a public hearing to hear our regular budget, and then we also had a public hearing 30 seconds later to hear about the revenue neutral rate budget. So we had 2 public hearings same night. So everything gets submitted to the county clerk, and on November 30th, the county clerk submits all budgets to the Kansas Department of Revenue, Accounts, and Reports. So that's kind of a quick summary, procedural summary of what is going on with property taxes in Lansing.
Tim, within your presentation, you're kind of going to let them know where we as citizens that live in Lansing might engage in that process. You're going to do that later on?
Yeah, I can. But I guess I can just jump into that right now, though. The public hearings are the best part for people to chime in. a lot of times we really haven't had very many people chime in, but the last couple of years as valuations have gone up, we've had a few more people attending our city council work sessions and budget public hearings, but that would be the best part. And the thing that I would encourage people to, we really truly do value feedback, but it is challenging sometimes when the feedback is very broad and when people just say, I want cuts. And that's okay, but try to be specific in terms of what you want to be cut. Because I mean, a lot of times roadways are one of the largest expenses we have. Public safety is one of the largest expenses we have. So if a person is going to give us that feedback that they do want to see some type of budget cuts, it's helpful if they can say, you know, pave 20% fewer roads this year, or don't hire another police officer, or something like that. Give specific feedback if you are going to be giving feedback. So, where property taxes in Lansing go, 80% of it goes into our general fund. 10% of it goes into debt service, and 10% of it goes into our library. So what is the general fund? I think that gets tossed around a lot in local government lingo. General fund: administration, police, municipal court, public works, streets, street lighting, IT, non-departmental expenses, which includes utilities, major projects, paving, things like that. So you guys can see police, which is that orange in the top right. So public safety is 28% of the city's general fund. Top left, 30%, that's non-departmental, so that's all of our utilities, but also transfers to our capital improvement fund. So drainage projects, paving streets, things like that. Next one. I was hoping this would scan a little bit clearer, but I hope you guys can get the idea of it. I think the county sends these out in November, and it's a summary of all of the different taxing entities and things like that. One of the things that is challenging, there are times when I think citizens are frustrated with property taxes, understandably so sometimes, and I think they lump all of us together. And it is challenging because I don't have any say in the county's budget. I don't have any say in the school district's budget or anything like that. What I have control over is the city of Lansing's budget right there. I don't have control over anything else. If you want to go to the next slide. And then this is a random home in Lansing. What a home appraised at $301,000 pays for property taxes to the city of Lansing is $1,140. I will have people tell me they pay $7,000, $8,000, $9,000, $10,000 to the city, and that's not entirely true. A home valued at $301,000 pays about $1,100 in property taxes to the city. So I wanted to break that down even further. So on this $301,000 home, your property taxes to the city, about $253 of that goes to our police department, so that's one of the biggest expenses. That non-departmental on the far right, $274. Again, that's drainage projects, that's paving projects, that's things like that. Our library is about $116. Parks and Recreation is about $88. So I feel like there's pretty good value there, but this kind of breaks it out amongst all of the different departments generally. And again, this is based on a $301,000 home. So a home valued at $600,000, you could basically double all of these figures. And then over the last several years, as property appraisals were flat-ish, you can see Lansing did try to keep our property tax rate fairly flat. The last few years, as property taxes have risen a little bit, we have scaled back our mill levy a little bit. So you can see in 2016, we were at 41.838 mills. We're currently at 32.912. And I want to close and just say, as a community, one of the best things we can do is to buy local. especially for cities. I know sales tax doesn't apply to school districts necessarily, but when we have new sales taxes coming in for the city, that can help offset property taxes. So I will leave you with that. If you're able to buy local, and if you're able to increase those sales tax figures for Lansing, Leavenworth, or wherever, that can really help offset future property tax increases.
Thank you, Tim. Before the school district starts, I did want to make one comment. I'm not going to go back to it because we're in the presentation here, and I want to keep it in cycle. But Tim said something that's really important. We have to understand who is consuming the taxes, and that's important because the city can get sales, the city can get everything but basically income. They've got a way of having a broader range of tax collections. School districts and some of the other districts, property tax is basically all they've got. Now there's some federal funds and some other micro funds, but all in all, it's our houses that help get our kids an education, and that's all. They can't create any more money, etc. So understanding the problem that each taxing entity is associated with is really important. So if we if we had more commercial property, they would help do more to educate our kids. Again, we go back to, we've got to identify the problems, and that's what we're trying to do. And then we got to get together and figure out, now we've got to do something different. It's like Einstein said, we do the same thing tomorrow we're doing today and expect a different outcome. It's not going to happen. So, but I just think it's important to understand that the next group, that's all they've got is property taxes. And to you.
Thank you, Mr. Powell. Mr. Price, we wanted to see, can we both be live on the microphones? Great, that'll allow us to not go back and forth. My name is Kellen. Thank you for being here tonight. Superintendent for USD 453. We are one of the bigger pieces of the pie, so to speak. So a little bit about our system, 3,500 students, 600 staff. We are the fourth smallest school district geographically. So the map that was alluded to earlier, we are essentially the city of Leavenworth from Muncie north. And so we are 17 square miles total. I'll let Marty introduce 469.
Yeah, Marty Kobza. I'm the superintendent for USD 469. We have about 2,600 students, including our pre-K kids, and we have about 480 employees that work in our district. We're a little larger. We're in that 45 square mile category. And we are rooftops. We don't have a lot of commercial, a lot of industrial properties that are in Lansing.
All right, so just a brief overview of the night, what we were asked to discuss. We're going to hit on some of the key components of our budget process. We'll probably go a little faster over those, but a review of the fiscal year as well as looking at the building needs assessment. Where I think we'll spend the majority of our time tonight is on the key components of mill levies, and you'll see some familiarity and hopefully connect some dots with regard to how we assess mills and the influence that property taxes have. And then finally, we thought we'd close out with some revenue neutral conversation, as I anticipate that has been relatively ripe for some of you. I know it has been for me, and so I just thought we would give some time and space for that as well. So, Marty, would you like to kick us
I'll
off?
jump into the next one. If we can jump ahead here a few slides towards his key components of the budget process. Perfect. That would be great. Our fiscal year begins in July, July 1 of each year. Our budget, though, however, is set annually between August 20th and September 20th of each year. And so we're into our next budget cycle before actually that budget has been approved officially. What we do as far as preparation of the budget, we typically look at it. You'll see a timeline that Kellen will talk about here coming up. But in essence, the administration looks at the budget, where are we at, what are we doing? There's components that go into it, like the building needs assessment that we'll talk about in a little bit, some other parts as well. And then that's presented to the Board of Education. We typically try some months in advance to do 2 or 3 presentations on the budget to say, hey, here's what's coming up, here's a heads up, this is what we're looking at as far as that's concerned. Hearings happen to set the budget. I believe Tim talked about his experience with revenue neutral. The school districts have been doing that now for a little while longer, but we have a revenue neutral hearing, and then in addition we have a budget hearing where we take public input and both of those, and that's an opportunity for people to speak, and they did. This year we had several people who spoke in addition to reaching out to board members individually. We've had a few once in a while who will contact the office and say, hey, could you explain this to me? Could I come in and you talk about what this is? And we're happy to do that. Myself or Danielle are happy to sit down with anybody and talk about that. As far as the budgets themselves are concerned, as far as challenges or appeals, our gentleman down at the end sets the assessed value, and we set mill rates based upon that to what our budget needs. So from a school district assessed value standpoint, you would not appeal that to us. However, there are two parts, really three parts that you can look at, but what comes up within that is what you can appeal is you can appeal protest on our LOB, which is our local option budget, also known as the Supplemental General Fund, and a 10% on that, as well as our capital outlay resolutions. Capital outlay is that mill rate that we set for building repairs, maintenance, those kinds of things. Those two are ones that can have a protest done on them. And then, of course, any bond issue that's brought before the public is for a vote. And the public can either approve or deny those issues. So that's kind of the components of the budget as we go through. And for some of you, when we start talking LOB, supplemental general bond, it becomes a foreign language a little bit. And so those are some specific things. If anybody want to know, what did you mean by LOB or supplemental general, we're happy to go into that.
Marty, if I could clarify one thing, because you've talked about the two, which is the LOB and the capital outlay. I think it's important to know that the general fund is set by constitutional.
It is. The general fund is set at 20 mills, and we'll talk about that a little bit because the legislature did give a little bit of tax relief through that general fund process this last year, and we'll get specific about that here in a minute. But locally controlled, we have our local option budget, our capital outlay fund, and then bond and interest based upon elections.
Thank you, Marty. So we thought there'd be value tonight in just giving a broad overview of the budget cycle. I'm going to just hit kind of some of the high points and emphasize maybe some of the challenges that we have. Probably the biggest takeaway is similar to the city, we are preparing a budget sometimes 6 months in advance during the prior fiscal year for students that we will not count until the 6th week of school. And so just last Friday, September the 20th, was the day in which, a very important day for all USDs, we are determined, our funding formula is largely determined by the number of students enrolled on September 20th. And so similar to the city, we were having active conversations as early as March, as I'm sure you were as well in Lansing. That fiscal year then closes out June 30th. So that is when all cash is effectively either expended or transferred into another fund for purposes of the next fiscal year. Budgets are then finalized and proposed to boards of education in either August or September, depending upon the revenue neutral status or not. And then we don't actually get the count, so to speak, audited until sometime in the second semester. So Marty's going to find out, coming back to Kansas, his audit may be as early as January or as late as May, meaning he does not get to know his actual spending amount, his final spending amount, so to speak, authority, until nearly the end of that fiscal year. As you can imagine, that does present some challenges for us. It creates some behavior for us. We are a little more conservative in what we bring to the board for purposes of spending on capital projects. It is why we carry some of the cash that we do, et cetera. So I think that's some important contextual background for you to understand as it relates to the USD's specific budget cycle.
I'm at a distinct disadvantage tonight. Dr. Adams next to me here is a professor at Kansas State University in addition to being the superintendent here, and he also, I saw you boo when I said Kansas State. And In addition, he does school finance workshops around the state for board members and superintendents, and so we have a true expert here that can help with this process. But building needs assessment, the building needs assessment was passed by the Kansas legislature. And Kellen said Marty came back to Kansas. This is my second year back in Kansas. I used to be here, left in about 2008 and came back. I was in Nebraska most recently, where our mill rate was 114 mills. And so they were 49th in the country for property tax burden. So it was a shock when I went there. It's not quite as much of a shock when I came back here, even though it is for our taxpayers, and I can appreciate that. But with the building needs assessment, what this was a legislative process by which the legislature said we want to hold schools accountable. In other words, we want 80% of our students to be at a level 3 or 4 on the state assessments. I believe it's 2028, correct, is when they want the states to be there, or the school districts to be there. And so there's this process that we go through in order to determine what is it that we need, personnel-wise, material-wise, whatever it is, in order for us to continue to move forward toward that goal of 80% by 2028. And so, again, this was a process the legislature put in place to provide additional accountability to schools as we've done that. For us, that starts with the BLTs, or really our site councils. Our site councils are groups of volunteer parents who say, hey, this is about the school, or that, or we need this or that. Our BLTs are building leadership teams. That's made up of staff, administration, who are giving input to say, based upon our data, we need this in order for the kids to improve. That then comes from the buildings to the district leadership team that has representatives of all the buildings that are on there, all categories of staff that are on there, and they give feedback and they analyze our data as well and say, okay, where are we at in second grade reading, where are we at in third grade reading, where are we at in these categories and areas, and what do we need to improve? And so then that's determined through that process, through the BLT, and then ultimately that comes to the board and is presented to the board for consideration with recommendations. If that's an additional interventionist here, if that's an additional admin in order to supervise instructional process and make sure we're putting them in place with integrity, if that is a certain software, if that's certain whatever, that can be presented through that process for approval. But that's what the BNA is. If you've heard that in Lansing, it's been a focus of conversation for a while. And so if you hear BNA, that's what they're referring to.
Thanks, Marty. We'll shift now to section 2, which is specific to kind of some of the unique challenges that we have at the USD level. I think it's important first to understand where the revenue flows from, and those 3 primary categories. The first of which is federal funds, which I use the moniker frequently strings attached funds, because typically there are significant strings attached and they are highly restricted in the purpose for which they can be used. So Marty and I both sponsor the largest restaurants in our respective districts. It is likely most USDs serve more meals than anybody else in their respective town. And so that is largely to supplement for families that cannot provide for food service, specifically breakfast and lunch. Title is specifically geared towards a specific purpose, such as professional development for teachers or providing additional aids and support for those with lower proficiency. And then finally, special education, which is geared towards specifically students with an IEP, individualized education plan. From the state side, we are largely a student-based funding formula. More students equal more dollars for any USD in Kansas. Not only from a base state aid perspective, which as you'll see is just under $5,400, but then they also carry with them what is known as weightings. The concept of a weighting is to send additional resources in return or in supplement with the idea that that student will likely need additional supports as well. So the best or common example I can give is a student that needs proficiency in English language services will come to us, and they will likely need an additional adult or services to work with them to help them become proficient in English. The state has recognized that. They recognize that the district will have an additional cost, and as a result, there are additional resources that flow as well. Finally, you'll see our portion of the pie, and I want to emphasize, we've given you statewide averages. So in certain districts, there's going to be less of a burden or less of a revenue source from the property side versus, say, the state side. So you'll see those ranges there. The third then is the localized taxes, ad valorem taxes, and you'll see there those come in the way of our local mill levies. In the USD 453, there's a total of 4 of those: the general fund, the local option budget, capital outlay, which is for bricks and mortar, and then finally bond and interest, which is a debt service instrument. And then I believe you guys add a 5th for cost of living, if I'm not mistaken.
Well, we actually have 6.
Okay.
We're special. So what we have is what's called a COLA, or cost of living adjustment. There's only a few districts in the state of Kansas that have that. Johnson County includes that. Around Wichita, there's 1 or 2, and then Lansing falls into that category, and that's based upon the cost of living in your district and a formula that the state uses to apply. So there's a bit of an additional mill rate that's there, and then we have my senior moment is coming on, but we have a tax basically for the bridge that crosses between the 2 schools, the 2 elementary schools, that was done in conjunction with the city, and it's in essence a loan that's being paid off by the district. You want me to go ahead? Okay. Our distinguished assessor down there talked about this already without having to go through too much of this. But again, what we're talking about, when we look within our district boundaries and what those are assessed at, you'll see the exempt is at 0, residential 11.5, industrial 25, commercial 25, and ag at 30%. Even though ag's at 30%, you'll see later on it's a low revenue stream for us again in comparison to when I was in Nebraska. You want to take the next one too, because I got off easy.
You want it, you said?
No, it's
Okay.
up to you, man.
All right.
You tell me.
So a little bit of dot connecting for me, born and raised in Hayes, and I trust you all know about the rurality of our state. This is the most urban or suburban environment that I've ever been in. If you look at the previous slide and you think about the number of rooftops that are carrying the water for both districts, it's all starting to add up. The lowest assessment value is also being placed upon the majority of those carrying the water. So that's helped me connect dots here in year 2, because I come from places where ag land or commercial property was carrying the water and there was much less of a burden. I actually did 3 years in Butler County, to your example previously, and I will tell you it was a much different environment based upon that distribution. So we thought it would be important to show you kind of some of the history of the assessed valuation. I believe Lansing is on the left side and Leavenworth is on the right. Hopefully that text is more readable here. But the emphasis I want to make is you will see that drastic increase in the double digits in really the last 3 fiscal years, if I recall. But I like to look at the 10-year average because I think that's much more appropriate. I realize that we have gone through some unprecedented valuation changes, and thanks for that great presentation because that helped me understand what's really happened. But if you look at that, there were years in which there was either negative or 0 growth for both districts here and several districts across the state as well. I realize that may not feel recent, but the reality is I'm looking at just under 4 3/4 and 5 and change for Lansing. So the 10-year average, I think, is the key takeaway for me. I realize that people have likely lost that memory because, as you all recall, it's what's happened most recently that I remember, right? But the reality is the district has not seen, either district, in my opinion, has not seen that drastic increase that we may be feeling most recently.
Yes, we're not experiencing that same type of percentage, and projecting forward, we're looking at 3 to 4% is kind of what our projections are telling us. And so the question is how do we tax for school districts, or how is that calculated? How do we go about that process? And what we have here is just an example on a $200,000 home. We understand most people in Lansing are going to have a home higher than that. And so if you do the math, you can add that to it. But let's say the market value of your home is $200,000. There is a residential homeowner exemption that was recently increased by the legislature to $75,000. So now your property value is $125,000 rather than $200,000 when you start to apply the percentages of the assessed value that's done to calculate the taxes. That used to be $42,000 and change. And so the legislature looked at trying to do some property tax relief this past legislative session. So they were considered a couple things. They considered dropping the mills, the statewide mill rate from 20 down to like 18, 19. That didn't go through, so they went back in. They had a special session. Those of you who follow that knew that. And this is the solution they came up with, is to say, rather than exempting 42 and change, we're going to exempt 75 off the value of the home initially. That's for the general fund only. So that exemption does not apply to the local option budget, as we talked about before, capital outlay, or the bond and interest. It's for the general fund only, the statewide levy. Then that $125,000 is taken times the 11.5% if it's residential property. And so you'll see then the assessed value of the home to which mills are applied to is $14,375. And then you apply the general fund mill rate of 20 mills per the statute, and then you'll come up with, for the general fund only, $287.50. You'll see that this exemption savings of $75,000 the legislature put into place is a savings of about $172 a year in taxes with what the legislature did in regards to that. So they deserve credit for that and their property tax relief efforts around that.
Thank you, Marty. We thought it'd be next important to kind of look at where we've been in the last 10 years with regard to our mill rate history. I am not going to go through all those rates because I trust you can read, but I think what this slide captures is two things: appetite and expectations. And what I mean by that is, what is the appetite for taxes at the local level? As you all know, there's a 7-member board that both Marty and I serve, and they have the ability to set that rate every year. And the second is the expectations. What are the expectations by the local residents, the local patrons and parents, and certainly by that 7-member board? If that board gives Marty the direction that, hey, we'd like a secured entrance at every single facility, and we lack that, and that's going to come at a cost of $2 million, that revenue has to come from somewhere. And so that expectation would likely have led to some budget maneuvers and or a potential increase. As Mr. Powell alluded to previously, the general fund is very much set by statute. We are not able to set that or manipulate that. The other 3, though, or 4, depending on which district you're looking at, are able to be set by individual board decision. And so back to that local option budget, you can go up to 33% of the general fund. It is essentially an extension of the general operations budget. Capital outlay, again, is very much geared towards bricks and mortar, and I'm talking in the smaller sense of bricks and mortar. Bond and interest, then, as you all are well aware, is a local patron vote that effectively says we authorize the school district to enter into debt service. And so there are some checks and balances, I would argue, for patrons and taxpayers. This is not all something that Marty and I can simply present and just go away with 4 votes and be able to put into execution. There are those checks and balances along the way. Probably the best example would be that localized vote. It requires at least 50% or more of the local patrons to vote on that. What's surprising to me when I think about the greater context of tonight's conversation, we are heavy rooftop in both districts, yet both districts have been able to pass bond issues. That is surprising to me when I look at the context of our greater challenges. So, Marty, take it away.
In relation to that as well, and when we talk about appetite, you also talk about what do people want for quality of education and what do they look at. And so just to beat up on our neighbors just a little bit, not you, Kellen, but neighbors across the river, as I watch political ads on TV and they tout that they're 48th in the country in education, and Missouri is ranked 48th in the country. When we look at Kansas, we're consistently in the top 10. And so there's an investment that goes into that to make that happen as well. And we appreciate that from people looking at that and committing to that. So again, this next slide, which is property tax by classification, has already been presented. You'll see, just to reiterate the fact that it's at that 78.2. If you look at distribution, the next one, Kellen, I'm getting easy ones here. This has already been covered as well. As you'll see, that the bulk of what's paid for locally in taxes comes from the school districts. You're talking a little less than 50% of what you pay in property taxes in Leavenworth County is going to go to the school districts in the form of the general fund, and then those other funds that we just talked about as well. Okay.
So what I like to illustrate here with this slide is the share of local property taxes compared to the state's portion. You've likely seen both these documents. They should have appeared in the local newspaper. I believe the top, if I'm not mistaken, is Leavenworth and the bottom is Lansing. And I just showed you the heading for the top two operational funds. So just some quick familiarity. You'll see to the left the prior 2 fiscal years actualized budgets, but what I want you to focus on here is columns 5 and 6 respectively. And so column 5 would indicate the total amount of that respective general fund or LOB. Column 6 then would be the water that's carried locally by the local property taxes. My point here is this: even when we assess 20 mills in either 453 or 469, we fall far short of being able to fund that entire budget. And so we are already setting those at those statutory maximums, and the rest of that cup, so to speak, is filled by general state aid. And so a large portion of our ability to spend is not raised here locally. Rather, it is fundamentally through that general state aid, which is a direct corollary of that student weighting that I mentioned earlier and that student base aid that was mentioned earlier.
In addition, just to add to that, there is state aid that's applied to bond and interest. Really not anymore. In previous bond and interest into the local option budget and into capital outlay as well. And so about 50% of what we expend in those categories in USD 469 is raised locally. The rest comes from the state in the form of state aid. The state, when it went through the Supreme Court case that you heard about earlier, one of the things that was said repeatedly is the quality of a student's education should not be reliant upon their zip code. That statewide, what we know is rural districts, our district sometimes, without our industry and our businesses, become really good feeder programs for companies in Johnson County and other places because our kids have all those attributes that employers want. And so we appreciate that. That's why that state aid is in there, so that there isn't a disproportionate burden on a local district based upon what they need.
If I could clarify what you just said, because words matter. You understand state aid, but we're really, and if I misspoken, we're really talking matching. You pay some, and then state aid matches it. So when you hear state aid, you're not talking about, well, they just hand money to you. There's an investment on the part of the school district, and then the state aids that with whatever calculation. And that way, so just understand it as matching, okay? It's when you say aid, there is a skin in the game with the district, and then the state matches it.
I would agree with that, Mr. Powell. The best example I can give is capital outlay. For every dollar that's raised in 453, another 52 cents is sent to the district. The idea of skin in the game very much applies with that type of matching state aid.
Yep. To talk about revenue neutral challenges, what you saw as far as our mill rate history with 469, and I know USD 453 is doing it this year, but last fiscal year, USD 469 went revenue neutral. And so what revenue neutral does, when you get in the mail, you'll get a statement saying if they went revenue neutral, this is how much your taxes were. They include the general fund in there. They include all that. Even though the general fund is included in that, statutorily, we can't do anything to lower that. It's still going to be 20 no matter what. And so if we were going to look at how do we lower, or where do we lower the revenues or make cuts in order to meet revenue neutral, meaning we're not going to spend any more money in those categories than we did the previous year, we can go to, in our case, we can go to the bond and interest, the capital outlay, the local option or budget or supplemental general fund, and in our case, we can apply it to the COLA, or the cost of living adjustment as well, because we have that unique one. A year ago, when we went revenue neutral, I had just come into the district, we about had a month and a half. Again, remember, everyone's hired when we approve the budget for the year. The budget year has started, everything is going. So to cut operational expenditures at that time would be really difficult, because we'd have to cut about $1 million. And so in order to do that, what we did, because we had some carryover in our bond and interest fund, was we actually lowered our bond and interest mill levy, knowing that that would have to go back in place. Otherwise, we wouldn't have been able to make our payment by 2029 if we left it at the same rate. So this year, the board voted to not go revenue neutral, and that mill rate went back up to 58.2 from where it was previously, in large part to make sure that there was money there that was going to make the bond and interest payments going forward. Could the board or could districts cut those other areas? Yes. But I think Mr. Vandall was very specific about what he said is where. And what are some of those specific categories you feel like we could? Sometimes it says administration. Well, we got about $1.1 million in administration. We need to cut about $1.4 million. So those kinds of things are great conversations to have and great questions for people to ask kind of as you come in and talk to us. Never a great idea to cut bond and interest, but we were kind of put in that position, and we did. And you'll see the others that I've kind of talked about, and I'll let you read those on your own. About 75 to 80% of our expenditures are typically for personnel. So when we look at that and we talk utilities, property insurance that went up for us significantly this year, and you think about it, you think, well, what does the school district pay? About $500,000 a year is what we pay for property insurance. And so as we kind of look at those categories, our budget's impacted very similar to like my household budget, your household budget is, as well, with similar things that are occurring in those areas.
I believe we'll stand for any questions if anybody has any.
Yeah, I think we're at the point to, any other comments from the panelists that you wish to add to what you've already discussed? Then if we could get a microphone out to the group to any questions. And like I said, I would ask you to reserve your questions to questions about policy, questions about processes, questions about how you can engage more effectively, where, you know, they kind of gave you, I think, a pretty good laydown at times during the year when they're working hard where you can actually go in and ask questions. First question.
This is for the USD. What is the unencumbered balance that each of your school districts have? The cash balance that you carry?
Sure. I hope you're not expecting it down to the dollar.
I am.
All
I
right.
want the cents, too.
Then I'm going to defer to Marty.
Well, instead of talking about the balance, because we said we were talking processes and policy, what are some of the things that drive, if I could rephrase your question more appropriately?
Well, I'm leading up to
okay.
a process.
Okay, well,
Sure.
let's keep it a process.
So let's start here. We're at $25 million in USD all funds, USD 453 all funds. I'll let you speak.
In USD 469, it's a major concern. We're at $5 million in all funds, and that includes bond and interest. For our operating funds, we're about $500,000. From a process standpoint, we have a $2 million a month payroll, and so when we look at that, we say we want at least 60 days, perhaps 90. So $4 million should be where we're at. And the USD, and we got that to about $500,000 this past year. We might be closer to 700 if we include food service and some other things, but really in our operating procedures there. Before that, we were at less than $50,000, which means any kind of a storm, any kind of anything, we weren't going to make payroll without taking out a loan from a bank.
And so is the goal to always maintain a specific level, or is the goal, okay, it's not just a rainy day, it's pouring buckets out there, we're going to spend down from that fund?
Sure. So I think it sounds like our district is in a different maybe mentality than 469 is. I'll let him add the context that he wants to. But let me talk to some policy goals and some probably contextual background that's really important. When you look at that $25 million, it's important to understand what funds that they are in. The first one is the debt service, i.e. bond and interest. If you have not looked at one of those amortization schedules, I would encourage you to do so. I assume you're all likely well familiar with a 30-year fixed loan. That's what I've done my whole life since I've owned a house, right? As you know, the payments are the same. It's usually light on principal, in fact, too light on principal when I look at it at the end of the year, heavy on interest. That is similar on a bond, except here's one change. The payments change. As you get later and later into the bond, the payments begin to double and triple and sometimes quadruple. So what people often see is a building balance in bond and interest, because at the front end, you are building cash. At the back end, you are burning cash. When the bond was sold, it's usually sold as this will cost your family 2 pizzas a month, right? And so the idea is to keep that mill rate very similar for that 20 years. The only way to do that is to build the cash at the beginning so that you can burn it on the back end. That's goal number one. Goal number two is, what has the school board provided for direction for capital projects? And what is a driver for your capital outlay fund? We are the only district left that is covered by Travelers Insurance in the state of Kansas. Travelers recently took us from a 2% wind and hail to a 5% wind and hail. I have, in round numbers, $300 million in the total valuation of our buildings, meaning if a hailstorm hits, I need to have 5% on hand to be able to cover that portion of the deductible. That means that we have a large expense, so to speak, if and when a single wind or hail event happens, realizing all of my buildings are really centric to the, I'm going to say, the inner core of the city. The third thing then is covering things like payroll in the event that the state were to default or be late on state aid, which happened in 2012 and again in 2013. So those are a couple examples that I can think of. The final one is the idea, and I think you guys have the same issue as well. If you begin to cover or carry your own special education, there is a good chance that at any point, what I call $1 million child can move into your district. There are children that will have expenses that will approach sometimes $500,000 for one single student for one fiscal year. If they stay with you for multiple years, they turn into a child that is extremely expensive. I believe they deserve the services, but we need to be prepared in order to be able to handle those expenses. I hope that provided some of the context that you have.
Well, and that child, just so you know, that's part of the argument with the legislature, is not 100% funded. So whatever the cost of that child is, some significant percentage has got to be calculated out of the budget for all those children that fall in that category. For whatever reason, whether they pay 100 or they don't pay 100, it still falls into a budget somewhere, taxed at the state or taxed at the local school board.
I'm going to try to follow two things that my parents said that I'm sure yours do too. If you find yourself in a hole, stop digging, number one. And better to stop speaking than speak and be thought ignorant than speak and remove all doubt. When I follow this guy, sometimes I have that feeling. But From our district standpoint, one of the priorities that we had coming in and when I was hired and brought into the position was to become financially or fiscally healthy. Part of that concern for me personally was last year when we went revenue neutral, the ability to, how are we going to do this when we don't have the cash carryover to do those kinds of things? And it's part of why I recommended to the board this year what I did was because we maximized operating expenditures last year, we realized some cost savings in areas that we went through and identified. These are areas we can save money in, and we did. And that's how we built up that cash balance. So we have kind of I have with the board that I communicate to the board a long-term plan. So if we can put away $500,000 to $700,000 a year to get ourselves to that healthy place, that would be great. Our issue is not that we have money built up in capital outlay, it's that we don't. And so we're in a position where that needs to occur as well, which requires us to move some expenditures from capital outlay that were done back in 2017-18 into our general fund. We are one of the ones left in the state of Kansas that has EMC insurance for our property casualty. They've dropped a bunch across the state, and then what they've come in and said is that if you have a roof that is 35 years or older, it is not covered at all, 0% for damage. We have a couple of those. If you have a roof that is over 20%, the maximum that you'll get covered is 75% of that roof. And so you got to come up with 25% of that as far as expenditures. We have deferred maintenance for about 20 years. And I'll be honest with you, I'm just telling you straight up front, and as I told the board, sometimes we just have to be brutally honest and say where we're at. And so if you hear us talking about, well, do we need a bond issue? Do we not need a bond issue? Those kinds of things, it's for those reasons. Roofs, HVAC systems that are 25 years old, those kinds of things. And then creating our funds in a healthy situation to where we can do our preventative maintenance as we should going forward. And we didn't because we got caught in financially unhealthy situation.
Another question. Yes, ma'am.
You know, the city too.
Do you have a microphone? We're recording, so we need the microphone, please.
I know I don't need a mic. You know, I don't get the deferred maintenance. I mean, we've been homeowners all of our lives, and you never know when the water heater is going to go out, or some of the things you can predict, but they just happen, and you have to take care of them and hopefully prevent them from being a worse problem. You don't want the whole basement flooded, so you have to deal with the plumbing in one small space. I don't understand why that isn't, that's a common sense thing. Why isn't deferred maintenance taken care of?
That's a great question. What I can do is I can tell you I've been here a little over a year. And so as we come into this scenario and situation, I tell you where we can go moving forward as we create a plan, and we create a 10-year plan for not only those projects you're talking about, but making sure that we have preventative maintenance plans in place all across the board. But you're exactly right. And that's what it really comes down to is as a homeowner, just like as a school district or any of the other entities, you've got to have a plan in order to do that, and you need to stay on top of it. There's some other things I could talk about forever tonight about how the district ended up in this financial situation, including some special education situations, and also when the state went through its process and the district made a decision to move some stuff into capital outlay as far as expenditures rather than spending it all on brick and mortar, those kinds of things. That would be a much longer conversation, but that's kind of the gist of it.
Just one thing I'll add. I think context is important. So I would encourage you to go home tonight and look at your home's value, and then what did you spend in 2023 or 24 on preventative maintenance, right? So I referenced the 300,000 or 300 million, sorry. We spent $3 million from capital outlay last year. So we maintained, so to speak, 1% of our overall building valuation. What are you doing at home? I would anticipate we're somewhere even higher than that as some of our homeowners. I could tell you, I'm proud to be able to maintain my siding and be able to paint it when it needs painted, right? I appreciate a good-looking and vibrant neighborhood, but the school district is only maintaining, in theory, about 1 to 2% per year.
If I could, because they seem to be dancing around the original question. Things like the insurance in particular over the last 6 years in school districts have exploded. And just like your insurance, when you get your tax rate and they go, wow, I can't pay another $300 on my house insurance. So how do you deal with it? Well, you accept that you're going to have to co-pay, you're going to have to self-insure, if you will, whatever that payment is that you have to do to get your deductible. That's basically what they're talking about. To be able to afford insurance, almost every school district across the state, not just ours, have had to accept a larger self-insurance burden, which falls in exactly in the account that you were asking about. They have to come up with the first $500,000 on a $3 billion, what it is, just self-insurance. And in the last 4 years, it's exploded. And I can tell it from experience. So they have to have those funds sitting in an account somewhere. That's the point, is you can't write a check that you can't cover.
So my question is, our county budget typically tracks along pretty close to the rate of inflation. We have a courthouse issue this year that created a problem with that, but normally it's tracking with the rate of inflation. Is your budget typically tracking about along those lines, if you go back historically like 5 years? And then the second, which is a little different, but it seems like civic education for our kids to understand all of these things, and even in political areas to understand, what's a precinct, what's the role of government officials, all of this Byzantine budgeting. I think our kids need to get that education at some point. So what are we doing to make that happen?
Wrong group, Mike, but a good question. They don't drive that. The state does, and the local school boards do. You need to ask the school board that question.
I think superintendents can have some impact.
Some, but it's a school board question. But thank you. It's a legitimate question. Yep.
So the inflation question, I think, is valid, and it makes sense. So something that's different about these entities, we are set very much by a statutory limit and what's known as the legal maximum. So what we can spend in a year is entirely determined by that student head count. Now, that's notwithstanding the bond and interest, which is very much determined by the ability to raise debt service for that bond that you passed, right? But if Leavenworth has a reduction in students, that budget will by default be decreased because that legal maximum is set by the number of students sitting there. So our budgets do not ebb and flow, so to speak, with the inflation. Rather, the ebb and flow of our budgets are entirely tied to the number of students sitting in seats, audited number of students.
I would reiterate that. I will take on the question. I will take on the question that you asked about civic. If you want to see what we teach, if you go to our website, what you can see is what's called our GVC. It's our Guaranteed and Viable Curriculum. We have for every subject area, every standard that's taught to our students. So if you want to see what are they learning in 8th grade social studies, you can go on there and you'll see the standards that are taught in 8th grade social studies. And then we, our mission and what we really try to do is teach to mastery in each of those specific areas. So there's local government units, state government units, and federal government units, but you can find those on there. Absolutely. Appreciate that.
Hello. This is actually to our county commissioner who had some good statements. I don't envy the spots you guys are in on the educational side. So you have some tough things to work through, and the board needs to work through those issues and take the heat where it comes. But when I was listening to Commissioner Culbertson talk about the opportunity from the roads to bring in the speed at which we can get to a major transportation artery, which can drive and fill up our industrial parks. I also think that you also meant two questions. One is, why is that not getting any support from your current legislatures? And then the second part of that is, you mentioned it looks like there's a need for a steward to kind of move some of those ideas forward. We have a declining population in our communities, both in Leavenworth and in Lansing. I'd like to get maybe the educational side of things. Do you have an opinion on what's driving that? But I'll open that up to Commissioner to kind of walk through a little bit more on your opinion on those issues.
I don't really have an answer for you as far as why our local legislators not picking up on the Eastern Gateway idea or any of these ideas, as a matter of fact. I kind of get the not my responsibility answer from just about everybody. So
if it's a declining communities that we're sitting in, it seems like it would be their responsibilities. I mean, are you kind of pounding the fist, or have you done that and you're exhausted, or just kind of what are your thoughts on that?
So I started this idea, the Eastern Gateway, 6 years ago, and we've met with Missouri entities, Platte County, Parkville, North Kansas City, all the other cities. We're working right now on, Tim's met with Parkville mayor, trying to get like a sister city idea going between Parkville and Lansing, trying to find a driver, exactly like what you're talking about. We need a driver, and so far I haven't found somebody who can breach all gaps with all the issues that we're having.
Yeah.
We have also not had much support coming from the governor's office on the bridge.
Secretary of Transportation,
right.
specifically.
So until we can get some buy-in from those folks and our senators, et cetera, we're not going to move ahead.
Yeah, I mean, I've even met with, for instance, Senator Pittman and said, hey, have I shown you the Pittman Bridge? Or I'd meet with Representative Proctor and said, hey, have you seen the Proctor Bridge? None of that works.
I think if I could, Jeff, speak to, from the chamber, if I misspeak, Jen, you slap me. This is the kind of dialogue that we want to carry on into the next role of us doing this, where we set the legislators down at the table, we set the local entities down at the table, we lay out the same problem that I laid. I mean, it's not rocket science. I showed you the problem, and talk to that and say why not. And then we need to say, what does it take? Then that collective group decide what actions need to be taken and assign those actions. That's the problem, is nobody wants to grab in any of these issues. We've got to have this dialogue, and as us as citizens, ask these questions and kind of force the groups to get together and then say, okay, how are you going to act on this stuff? And I think the chambers, we're trying not to force it, but to be part of that.
And to follow up with that, a lot of the answers I get is, well, on just one vote. And so then I say, I understand that, but you're not getting on your soapbox and preaching to the other voters in Topeka what we need. So I don't know how to
10 more minutes, and I want to make
get
sure,
over that.
if you don't mind. Yeah, I don't want to make sure are there any other questions. And there's silence. Well, let me ask you this question. Was this valuable for you all? Would you like to see this continue, our chamber continue to try to build these forums? Because we've had some really good groups come in. You're one of the larger ones. So any suggestions you have, we'd be more than glad to take those, because we want to be an enabler. We're not trying to profess one way or the other. We're just trying to help us as a community get better. And we know we're in trouble in some ways. So thank you, thank all of you for coming. We really, truly appreciate it. Jen, any closing remarks? Please thank our panel. They laid it out here tonight and came here. Yeah, Wednesday, we have the candidate forum. It'll be at the Leavenworth Library at 5:30. October the 23rd, mark your calendar for the sales tax forum. It's 5:30 at the library.